Yo.
Yeah.
Mic check 1, 2.
What's the word?
Listen the first time. All our friends and family.
Please.
The first time we give you the information, go lay it up. Go get a win.
Yeah, this is the training wheels.
Mm-hmm.
And you got the training wheels.
On dirt bikes.
You know what I'm saying?
With no percentage of management.
Oh man, it is November now. That was fast.
Man. Glorious.
We here in November, which historically has been the best month to invest. Although October didn't perform like it historically does. Now that it's September, so we'll see. Mm-hmm. But happy to be here. How y'all feeling, Ian? How you feeling?
Amazing. And the great part is, regardless of what happens in September, October, November, if you hold for long term, everything's fine.
This is true.
Heard it here first.
How we feeling, my guy?
Feel good, man. Shout out to everybody out there that's been tapping in. You know, do remember this week we got a big week. We got Blackout on Wednesday, 10 o'clock Eastern Standard Time. We got a special guest, Conscious Lee. Somebody that I've been following for a long time. And you know, he says a lot of game on social media about everything, really breaks things down in a very articulate way. So we got a lot to talk about with him. Looking forward to that conversation. And then Thursday, we have Dre London.
Hey.
Shout out to Dre London. If you don't know who Dre London is, he's the gentleman that's actually responsible for Post Malone's career, amongst other things. From
that alone.
From London.
Just gotta do it once. You gotta get it right once.
That's a great lesson. You only need one hit, and that boy made a bunch of them.
Oh, he made about 9 of them joints that went diamond.
Yeah. So Brixton to Hollywood.
Yeah. Shout out to the yard.
We talk about his journey. So that's a dope conversation. That'll be out at 6 o'clock Eastern Standard Time.
He called Post Malone early, right?
Early.
Yeah.
This is a great lesson for anybody who's an entrepreneur about how to, because sometimes you don't even have to be the star, but if you manage or help develop the star, whether it's a star product, star player added to the team, please tune in Thursday. This is one of those conversations you do not need to miss.
And he's an entrepreneur that just has a hustle spirit. So even during the success of managing one of the biggest artists in the world, he's figuring out how to create more streams of income for himself, which is a testament to the work ethic and the vision to see like, all right, this is hot right now. This is dope, and he'll have longevity. But what am I going to do on my own to make sure that I have sustainable wealth?
Is it unfair to call him a manager when he was really like, I don't want to say CEO, but CEO of that brand? I think a lot of times they put labels on us that if Post Malone was a tech startup, he would be looked at in a different light. That manager, podcaster, influencer, they'll throw these titles around to not fully give you full respect for what you developed and built.
Yeah. His story, I mean, that probably is very fitting for him when you talk about not only managing the day-to-day, but also bringing deals and putting records together, putting artists together that are going to perform. We talked about the Sway Lee record, which is the #1 stream song in the history of streaming. Like how that came about, like, and he's probably the quarterback on put it. Obviously, those guys have talent, and you have to put that talent together to make it work. But he played a very ignorable part in that.
For sure, man. So yeah, check that out. And we'll be in Dubai this week. We got the Daniel. Shout out to Daniel. He got an event on Saturday. And congratulations in advance to boy Terrence J. He about to get married.
Hey.
And then also shout out to Steve Harvey and Tabidi and all them. They got this weekend in Abu Dhabi, they got the Food Festival.
Okay.
So
shout out to the gang.
It's a lot going on out
there. Family reunion.
Facts.
Facts.
So you know how that go. All right. So shout out to Dipset. Got my Dipset hat on. Man.
Nothing came in the mailbox for me, brother.
I gotta make sure I get a proper respect. No magic with the K at the end. They actually activated at InvestFest. Man, they doing their thing. And Jim Jones, my brother Jimmy.
Shout out to Capo.
Always a pleasure, man. We got something cooking up with Jim. Shout out to Jim and the whole unit. Ian, any announcements?
Stock club call would be tomorrow, Tuesday at 5 p.m. Central. See you guys in Dubai. Looking forward to it. Congrats to Terrence J. Daniel. I'll be there. Show my love and support. It's always good to get back with the brothers, especially in a new continent, you know. And if I made you money, please put yes in chat. If you want to get rich from investing into the market, go to ianinvest.com. Join the stock club. Prices will be out next Monday for stock club members. I love y'all. Let's continue to invest, get wealthy. You deserve to be rich. That's
a fact. That's a fact. Before we go any further, I just want to share my thoughts and condolences and prayers to everybody on the island. Obviously, Hurricane Melissa hit right after we did Market Mondays last week and has devastated the island. And so I see a lot of people trying to figure out how to give back. I've sent some stuff down, some generators down. My wife's family, but my family was affected. So we're sending some generators down. I'll talk to y'all off camera to
please let me know.
How y'all can help. But I saw shout out to a lot of the artists out there that are helping. I saw Shaggy put together a foundation, Sean Paul put together a foundation to help the island get power back. Right now, they said that there's not going to be power restored until maybe November 19th or 20th. And so imagine, you have no power, electricity for 3 weeks. Young children, adult. I mean, it's tough. It's tough. So we're going to do as much as we can to help. And so shout out to everybody that's been doing stuff already. Much love. All right. So you know how this works, man. This is our disclaimer. Our content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. You should take independent financial advice from a professional in connection with, or independently research and verify any information that you found in our show and wish to rely upon, whether for the purpose of making an investment decision or otherwise. Continue to do the research, share the research. Let's build wealth. Let's build community. Let's build our brokerage accounts. Let's build each other. Love is love.
Build each other is key. Partnership in perpetuity.
That's a fact, man.
It's a key to life.
We just get along.
It's a key. Partnership, equity, non-dilutable shares. Invest in other countries.
Yeah.
Hello. End episode. Let's wrap it up.
So starting off with trading, what's futures trading tip of the week?
I don't know if I went over this in full detail before, but to my futures traders, having too tight of a stop loss is almost worse than having no stop loss at all. A lot of times when we're looking to get into a move, we're looking to protect our account. And both of you can speak of this from the options perspective, but sometimes you can have a stop loss that is so tight that you don't even give yourself room to be able to let the move fully mature. So I know somebody last Friday who probably missed out on like 60 grand having a stop loss at $1,200. Like, I get it. If you're trading a bunch of contracts, you want to have protection, but you need to put your stop loss in places where the brokerages and competition won't hit your liquidity sweep zones and stop loss zones and hunt there. And also, too, like we were talking to one of our good friends before this, you have to know the exit before you get in. So if you're going to lose $6,000, but the upside is 60 grand, why cut it off at $1,250? You go into it knowing, put this in chat, go into it knowing what your maximum loss will be and what your maximum profit target will be, but having too tight of a stop loss damn near is worse than having no stop loss at all.
It's a terrible feeling. It really is. It's a terrible feeling.
For it to go down and then go where you knew it was going to go. Oh my God.
Yeah, it's tough. I think that's why a part of that plan, we always talk about having a plan, is figure out what that threshold is. I know some people don't have a strong threshold, so it might be a 20% pullback. But especially when you're talking about equities, that's a correction, right?
Yeah.
When you talk about futures and options, that's a blip
on the radar. Yeah.
Right. Like that could be in 5 minutes. And so you got to take that into account, how volatile that these assets move or these derivatives move. And so 20%, it feels like, all right, depending on the company, that feels like it's safe. But like I've said, I've depending on the company, Nvidia, I've taken a stop loss off because I understand the company, I understand how the market moves, and I understand the long-term vision for it, which is why we always buy time. And so if you don't have time in it, right, and you're having you're going to lose out. So putting that there, I like, and I know we've gone back and forth. When I'm doing an option call, 30 to 40%, I feel like is a safe space. Now, like I said, depending on the company, that'll change.
Quality of the company, yeah.
Quality, Micron, I've changed that for. Microsoft, I've changed that for. But like Super Micro, right?
Mm-hmm.
Once it hits a threshold, I gotta go.
Yeah,
I gotta go. I don't love, right? I'm not in love with the option trade, right? It makes sense, and I feel like it can make money. But if it's not making money, then there's another opportunity where we can put that capital. So have a plan before you enter any position. We can say it, but most people still don't do it, right? Like we talked about our close friend, made money, and now it's trying to figure out what should I do.
You have to know the exit.
You got to have a plan.
Yep, because you can't figure out how to assemble a plane on the way down. I know they love to say that in Silicon Valley, like figure out how to build a plane on the way down. It doesn't work that way in real life. You're gonna crash out every time. And also, too, even with the asset, they were trading the ES Mini, the S&P 500. I'm like, if you knew the market was falling, why have such a tight stop? And we've been falling, but it's fear. It's fear. A lot of it is not knowing your entry, not knowing your exit, when you're going to profit. And then the other part that isn't talked about enough is you're doing so many different things. And when you're trading, you end up getting confused on how this is going to pan out. That's why I say trade one way in, one way out all the time. So you can have a huge data set to know what the outcome is going to be.
Yes, there's that psychology. We were like talking about it before, but it's that psychology. The fear comes because of the lack of education and experience in it, which is understandable. What is the other side of that when you see people win, right? Like if you're you're watching people, especially when you watch people on social media, it's like, man, they've had percentage gains. Psychologically, do you think that works as a detriment, or is it more advantageous to say, oh, I should be involved? I often wonder how people view that.
Maybe both. Rashad, what you think?
Yeah, for sure. I think it psychologically definitely plays a part as far as investing is concerned, because no one wants to lose money, and then no one wants to have somebody make more money than them. So it's a catch-22, because you don't want to lose money, but then the risk of making money. So you constantly kind of,
run your own race. Yep.
Yeah. Sure.
Keep your eyes on your own paper.
I think that's a bar right there.
Keep
the risk
eyes.
of making money. Like you already said, the risk of making money, which is like, damn, that just sounded crazy just now. But because, that's where we're at.
Because you're seeing other people post their gains, but not always their losses. And on top of that, when you start to have too much comparison, that's when the FOMO and the over trading and the over leveraging really kicks in. It really kicks in. Just focus on your race, follow your plan. And even like I told you guys, an investor, use ChatGPT. It can tell you the directions. And I know some of you guys are doing that. But even with the technology, if you don't know what the outcome is going to be based on a number of 40 or 50 trades, GPT not going to save you. You can have all the right information. It's happened on the show. All the right information, and then you choose to do the opposite of it. Like just follow your plan through and through. And then upload your data from NinjaTrader to be able to see, hey, okay, where could I improve time in the market, profit factor? Did I get the direction right? Have it be your coach, but you have to go through and follow your plan every week.
Yeah, I got a random question, and it's kind of like in that same realm. When you have winning years, right? Like you've compounded winning years, probably for the last 4, right? Does your risk tolerance become greater, or do you stay as disciplined, right? Do you say, hey, I might try this now because even if I have a loss here, I'm going to offset that by my unrealized gains that have been positive for 2025. Some people, I'm starting to notice that they're becoming riskier and riskier as they've had positive gains.
I think one of the biggest mistakes is to deviate from what got you to where you are. And as you assume more risk, that's the time when Trump will be F China 300%. Like something always go wrong when you deviate from your plan. Can you scale up because you have more capital in your account? For sure. But the risk parameter, like my targets have not changed. They have not changed. Like the amount of contracts as more money has come in has changed, of course, but I'm not saying, well, if it draws down 50%, I'm like, no. I think
I think that it's a number that you have to work backwards to see what you want to
reverse engineer.
Accomplish. Yep. Yeah, because sometimes if you have, let's say, $300,000 and you put it in one stock, sometimes getting 50% on that 300,000 might be more beneficial than taking a risk with 50,000 to get 300%. Because of the risk reward ratio of like,
it depends on your time.
If you put money in Nvidia stock, it's not worst comes to worst, just wait. But if you trade in it, then it might go down. You might not have enough time to recover. You might.
It all depends on your stat. People don't look at their stats enough. Like I'll ask people, if you put $10 in, what return are you getting over your last 42 trades? They're like, well, I think that no. What do the stats say? So if you're only getting back $11.50, you should trade less. If you're making $55 for every time you put 10 in, or $18 or $25, up the risk. But it has to be based off the stats, not emotion.
Yeah. I asked that because of the conversation I had this weekend with some of the young kids in my neighborhood who have been in like solid positions and were having a great year and decided that, hey, we're going to try to trade Beyond Meat. And I'm like, well, is it because they've had success that they have now saying, all right, let's take a risk here because we've gotten gains? And I'm like,
it's ego.
I see that. Yeah.
But it's also you take more risk when you have less to lose. That's what Rick Ross told us earlier. He was like, when somebody got the box Chevy, they're going to take risks that somebody with a $5 million, mansion is not going to take.
Take for sure.
Because it doesn't, like I said, 10,000, 15,000, 5,000. That's a lot of money. I don't want to, but I'm just saying, if you got $500,000
or $2
million, you might have enough courage to just let it ride. Let $500,000 ride on a trade, and you can make $4 million. Or you might just say, I gotta have too much. One thing, the number one rule is not to lose money.
Repeat that, please.
That's the number one rule, not to lose money and to respect the money. So when you have more to lose, you have a higher level of respect for that money.
For the capital, yep.
Because it don't really matter. If I got $500, in the grand scheme of things, it doesn't really matter, right? But if I got $500,000,
it matters a lot.
Because if I lose that, I might not be able to get that back, right? That's how the average person is thinking. It's like, it took me forever to get 500,000. I can't afford to lose 500,000. I can lose 500. I'm not losing 500,000.
And what happens is, like, we'll get a bunch of wins. Like this happened like when I first came across Art. So he gave me a blueprint. Like I shorted Research in Motion, shorted another company. So at the time, I'm like, oh, I don't even need to listen to these rules. Then Cisco. You have to know which are fallen assets first that you can short. And sometimes you can have a good run. Let's say it was Nvidia, AMD, Microsoft. Now you're like, well, I can make something happen with Beyond Meat. It's like, the fundamentals of that company, the entire sector is falling apart.
Yeah.
Well, it's like baseball. You start swinging at pitches. The worst thing you can do as a hitter is start to swing to hit a home run.
Yeah.
You got to stay within your rhythm, because when you start to swing to hit home runs, you start overreaching. You start swinging at pitches that you shouldn't be. It's the same any sport, right? Like basketball. When you go into it thinking, I gotta score 35 points.
It never goes that way.
You're going to take bad shots. You're going to not pass the ball when you should be passing. You're going to get out of the rhythm, and then you're going to have a worse game than if you just actually went with the flow. But with that being said, with futures trading, do you recommend scalping or holding for a month? And can you explain the difference?
Scalping is a short-term move, so it's anywhere from 1 point to 4 points. You'll usually be in the market from 1 to 10 minutes. Long-term holding is like, because you only have a 30-day window in futures to be able to hold the asset. The answer is, well, the downside of holding, it costs a lot more. So if you don't have the capital to be able to hold those positions for a long period of time, that will suck. So right now, so like for one contract on the S&P 500 future is 24,000. If you trade it intraday, it's 500. So even in the price, if you hold for long term, you have more of a guaranteed move, but it costs more. If you scalp, there are advantages, but my thing is you should only do 4 to 6 scalps per month because most people overtrade. So my answer is always to do whichever one you're most disciplined with. Should you scalp? Yes, but you should not. Usually once a week, maybe 6. But what I see when people start scalping, it becomes so easy. It's almost like gambling, right? You'll win a move, let's say $4,000 in 3 minutes, and then you're like, oh shit, if I just do this 4 more times, and now they got you. Now you in the prize picks 9-leg parlay lost move. So it's still, even if you're scalping, shout to prospects. But if you deviate from your plan, you're going to have a lot of destruction. Scalping is good, but you want to be able to hold the asset longer. So that's why I recommend like trading off a higher time frame, like a 1-hour chart. And if you can hold a move for an hour, 2 hours, you can get more sizable gains.
Scalping, that's a disciplined like thing to do, because you gotta like what's the setup for somebody that's scalping? Is it like they got the screens up, they're watching the minute chart? Like how is somebody...
I would recommend never use the minute chart. Okay. And I probably shouldn't say this publicly. You shouldn't trade off of odd time frames. It's a mistake. Huge mistake. 1, 3, 5, 15. Those are not the time frames you should trade on. Trade on even time frames.
Okay.
Even time frames. Let's talk about Bitcoin.
Okay.
Hello. Some wisdom right there, boy. Ooh.
Bitcoin fell 8% last week, and as crypto continues to pull back, and then it's kind of been, up and down. 6-7. How long will this drop continue, do you think?
I mean, first I want to say, like, it's interesting to be on the side of the coin saying this. I don't understand why people are so afraid when the drop really hasn't been that deep for crypto or Bitcoin. I had a lot of people hit me this weekend asking, like, is Bitcoin over? Like, I'm like, this is the time to buy it. Like, and I literally said on the show last week, I'm like, okay, anywhere from 102 to 103 or 105 is a buy area. Then we get to the areas and people are like, well, Bitcoin's done forever. Not according to BlackRock and Vanguard and Larry Fink.
Well, that's why it's vitally important to know when to invest.
When to invest. Yep.
Like, you know what I mean? Because even when we were on tour, and I'm about to tie this all in. Mm-hmm. But when you said Bitcoin, it's a time to invest in Bitcoin, and I put it in my stories. I'm like, you gotta like Bitcoin at 80,000. It was like 70,000. And at that time, people were nervous that it was gonna go back to 50,000. And now it's over 100,000 since June. Mm-hmm. It hasn't fallen under 100,000. So like that's why, like, when you talk about Stock Club, it's one of these things that's like, yes, dollar cost averaging is always recommended for sure. But if you really, it's like,
you want to get a higher return,
knowing when to put money in can actually change the whole trajectory of your portfolio. But I want to do something. Can we bring the guest on for a minute? Because we had a call offline, but I wanted to continue this conversation. What's up, my brother?
Everything's good, man.
You will not.
I got some advice
like
for you.
Monthly
for real
to the show at this point.
Oh yeah, absolutely, man. Listen, y'all ever need to add a testimonial, something, bro?
I do it right now.
I'm up on calls, bro. I'm up. First off,
David Shands.
Dave Shands, what's up, my brother? So Dave, we had a conversation offline, but I think that what you said is vitally important, because I'm pretty sure it's a lot of people that kind of feel the same way. So I'll give the audience the background if they're not familiar. Dave Shands, this was 6 months ago, maybe.
January 11th.
January.
Yeah.
And Dave Shands, I walked Dave Shands through his first option play. He never made an option play before, right?
Absolutely. I was like, yo, what took you for?
Like you didn't know, like. But long story short, he got into an AMD call, and the AMD call was a roller coaster. It was up, then it was down, then it was down more, then it was down really bad. He stayed with it. called me a few times asking, should he sell? He was like, yo, if you sell, let me know, because I'm in the call with him.
No, can we add a piece to this story?
Yeah.
I'm getting the call like, yo, bro, you sure about this?
Rashad didn't pick up, bro. I'm like, yo, what we doing?
Bro, just trust me on this one. Just trust me on this one.
So fast forward to now, he's up 300. How much you up? 300 and what?
Well, today I'm down $15.
Percentage wise, how much you up since you've been in
Stop
there?
it, David.
I don't want to hear this shit, y'all. All I ask is you got 2 plaques on the wall talking about I'm down $15.
Let me hate $15. But I'm up 378%, up $22,000. Things are happening right now.
Oh, he's giving out dollar amounts. Okay.
My children say hello. My children say thank you.
So Shands is up 338% in less than 1 year. Okay, but you had a vital. You text me today, and you was concerned about AMD going into earnings. So you said, should you sell? So this is something that, like I said, a lot of people knowing when to sell is something that a lot of people have questions about. Making 300% and not wanting to lose money is a valid concern for sure. So these are all things that I'm sure a lot of people have the same questions about, right? And I just think it's dope because you're a content creator and you're in the space and you're learning in real time. So we're going to talk about our advice to you, but what's your emotions right now as far as this option trade so far?
I have earnings call past trauma, bro. I've experienced trauma.
In which company?
Netflix, bro. Netflix hooked me. You hear me?
But let's help with your trauma. Let's fix your life.
Yeah.
Nvidia earnings and Netflix earnings are different from AMD. So I know that pain is still there, but first and foremost, when you got into the option, did you know what percentage gain you wanted to get before you exited?
You asked me this in front of people? Yeah. Come on, these are like behind the scenes conversations, bro.
We're coaching. Welcome to Traders Therapy.
Like,
with the intro and Rashad, new segment, Traders Therapy.
No, I didn't.
This is the trading hot seat.
Hey.
That might be a show.
Hey, you be flaming. Yeah.
No, I didn't.
Okay.
I did not.
Well, you know, the earnings cooked a lot of people. Meta notoriously, I mean, they just dropped $80 last week,
which was unbelievable. Yep.
Before that, Meta, they had the worst drop in history a few years ago. So that earnings can definitely hurt, especially if it's options, because whatever you feel in the stock, you're gonna feel 3 times more in an options call. So that's a valid concern that you have.
Quick question, Dave, around the Netflix, because did you buy the call leading into earnings, or you've been in the call already?
No, I've been in it, and then it was like a
okay.
Ooh, it was a slide. But then I was buying down though, like when it dropped. I think it's gonna come up. Yeah, I'm still getting cooked right now, but it's part of
you believe in the company?
Yeah, absolutely.
Okay. Long term.
Okay.
All right. So Dave Shands wants to know, should he sell AMD before earnings? What's the unanimous decision?
No,
hold on. Let me tell you what happened. So I said it before the call, and then one of y'all on the speaker was like, "Yo, the call is the next year." So he didn't give me financial advice, but the way he said it's secure. I said, "Okay, I'm gonna chill."
You have another year to work through whatever precipitous decline or upside that they have. And the thing that we're trying to stress to you, because you're starting off, you're like Ohtani. You start off with a home run. Stay in for the long term, because not only will your confidence get built off of this win, look how many people in your family lives you'll be able to guide and help through the same kind of situation. So don't get out early. And I think it's a mistake for any trader or any investor to only look at the short side, because what if you miss out on another 120% to the upside?
Yeah,
here's my question too. But so how do you know? So the last time I was on Market Mondays, like we had the testimonial, joint shot up, and I only have 2 contracts, and one of the advice was like, yo, you could just sell one and then keep the other. But if I'd have done that, I'd have missed out on a whole bunch of money. So how do I know, like, what's the top, or do I just ride it out, period? Or am I looking for something?
I think that's what the knowing where you're going to exit the position before you enter it plays in, right? So I always say, like, I like to get 100% return if I'm investing. And so if I bought 10 contracts, or like you did, you bought 2 contracts, if I get to 100%, then my initial investment comes out.
So
right? It gives me the capital to say, all right, if the one that I still have remaining continues to grow, now I can re-enter perhaps a later position because I believe in the company so much, and maybe get 3 contracts, right? Because it's going to be a little bit cheaper. So you always got to have the position mapped out, which is why I always say buy time, right? So when you bought that, and I think it's important, your story is important, your testimony is important, because this wasn't a home run at first, right? Like, I think people need to realize that, like, when you bought the call, it actually pulled back because DeepSeek happened at the end of January, right? And then April 7th happened and we saw a pullback, but you didn't sell, right? You kept it. So it actually was a negative contract that actually turned out to be a 300%, which is why when we started the show was like, well, what's your stop loss? Well, if Dave put a stop loss, he would have sold all that and missed out on
all the upside.
Right. But also, if like, let's say, for instance, my target was to be up 200%. If I'd have hit the 200% and I'd have sold, I would. I would be upset. You know what I mean? Like now.
Yeah, for sure. So the thing about it is this: you can never lose by taking profit. Also, ChatGPT is your mentor, so you should be having daily conversations with ChatGPT because it's not going to tell you exactly what's going to happen, but it's going to give you a very educated sentiment of everything that's happening in the world. The good thing with ChatGPT is that at the end of it, because how I use ChatGPT, I ask it a question and it types it out. But I'll hit the record because 9 times out of 10 I'm too busy to read a bunch of different stuff. So it voices it. It's like a voice, right? It'll say, okay, da, 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 da. And then they say, okay, now is this sufficient or do you want more? So it'll tell you the traps, the highlights, what to look forward to. You know, are they still bullish on the situation as far as the market sentiment? What are all of the analysts saying in aggregate? What's fueling it? It's the AI. It's the AI crave, right? What could be potentially harmful to it? So do you have a better instead of guessing, right? Instead of guessing to say, is it going to go up? Is it not going to go up? Who knows? You can have daily conversations. So it's almost like you're getting, so like a CEO gets daily reports from his company because they don't know exactly everything that's going on in the company. If the company's so big, you can't know everything that's going on. So the leadership has to report. It's like government. Leadership has to report to the person to give them a briefing.
Got it.
So you can structure AI to have briefings on a daily basis on all your investments. So that way you are at very least highly educated. You watch Market Mondays. And now you can say, okay, I made 300. I'm going to take some off the table. I'm going to let some ride.
Let the rest
or I got another 18 months. I'm pretty confident that it's still going to go up. It might pull back in the short term, but I have a high level of confidence that over the next 18 months, the stock is going to be higher than it is right now today.
And in the spirit of InvestFest, even though you didn't ask Dave, a good prompt: act as a world-class investor based on the last 5 years data. What's the average that AMD goes up over a 3-month or 1 year period in this option? And it will start to break down the options and how much they will go up to know if you have some meat left on the bone, pause, or if you should start to take profit. You don't have to guess because it'll tell you the exact calculation of how much each option, future, asset classes went up and went down. So you can know if you're up 300%, if the average is hypothetically 315, you know how much more room you have to go if you want to maximize or if you want to take the money off the table.
That's
And so you got a port. So tomorrow is earnings. So you're talking about earnings from fear, but you got to look at how the market has performed and how that sector has performed. And so we can look at Broadcom, and we can look at Micron. We can look at all these semis and see how they performed, and then we can ask ourselves, what's the sentiment for the sector, right? And then what still is the bullish sentiment around AI. Have data center expansions increased? Well, we just heard Amazon saying they're about to go over 120 billion, right? We just heard Meta, which pulled back because they said our CapEx is going to increase in spending. And so that AI story is still there. The data center story is still there. And then you look at what's happened in the quarter for AMD. Yeah, they've been on a nice run. Did they have any catalyst events inside the quarter? Well, yeah. They announced that they're partnering with this company called OpenAI, who actually owns ChatGPT, right? And so now they have a 10% stake. So it's more advantageous for OpenAI to perform, and we're seeing it. They're right about to hit 1 billion monthly users. Having a 10% stake, well, where are they going to get that compute from? Yes, it's going to be from Nvidia, but it makes even more sense to have something that's going to cost less, which they can have in-house, right, which is AMD. And in addition, they have new products, right? So we've been talking about this on Market Mondays for a while, but the M1350 is about to start getting into that cycle of revenue, right? So that's that GPU that is the next tier, right? So when we talk about Nvidia and we're talking about obviously Hopper, but now Blackwell and Barkwell Ultra in a few months, AMD is now putting that second tier GPU in market. And the people who can't afford at this level will be able to get at this level. So you take all that into account. You see that the moves that they're making. You see that Lisa Su is becoming more visible. You see the partnership she's having. It feels like there's a bullish case. So we'll see. I like it. But the reason why I like to say buy time is because you buy in those catalyst events. Yeah. So when you did it in January, I'm already calculating, if I do something out to June next year, that's at least 4 to 5 earnings reports.
It gives yourself time.
Got it.
Right. That's at least 4 to 5 of them that we're going to calculate inside there. There's going to be innovation inside there. There's going to be partnerships announced inside there. There's going to be volatility that's going to be priced inside there. And so we're using all that to our advantage when we make that call, when it goes out over a year, plus the tax incentives, right? If you would have bought a January contract, there's going to be some short-term capital gains. Whereas now when you're in June, there's long-term capital gains. Because the great thing is you've made this money, right? That 300 or 400% potentially by tomorrow. But if you got to pay capital gains tax on that, then you got to make sure that when you get those gains that are realized, that you have the money to pay those taxes as well, which is a lot of people have to remember inside of investing.
Yeah, I realized that I need to ask a really immature question of what should I do versus finding out what's happening and even ask you all the questions. Because I know people come up to you, should I buy this? Or I think the next conversation that I have with you all will be backed by some reasoning of what I'm doing. Saying, okay, I see this, I see this, I see this. What do you make of that in terms of my question asking? Because then I'll get a better answer versus, what do you think I should do? So,
but it's still a great question.
You have to be educated to ask the question.
Yeah.
I like this segment with you, Dave. Yeah, we should have you back as a regular at least once a month, because now people can actually see your trading journey in real time and go through all of the aspects as far as the emotional and ups and downs. But before you leave, my last thing is the Bitcoin situation. Remember, we was on stage and you asked Ian about Bitcoin. And I think it was I don't know where it was at, 80, 70, around that range.
Yeah.
And he was like, nah, it's a good time to buy. And then you was like, well, how do you know? How are you sure? So Bitcoin now, it's been, like I said, it's been hovering around $110,000. So from that standpoint, in less than a year, Bitcoin is up $40,000. So did you buy Bitcoin?
I didn't buy it, bro. Leave me alone. No, I'm sorry.
Why would you listen to your boy?
I know, man. I know.
It's okay.
I didn't have faith. And I'm sorry.
So you don't have faith in me?
It will never happen again, bro. It'll never happen again.
Thank you.
I should have bought a Bitcoin at that time.
Well, that was a hell of a time. That was a layup time, but it's okay.
Yeah, I got you. I just showed Shadi a text I got from a dude in my neighborhood, and it says, "Today I'm the Dave Shands." Am I lying? It says, whatever the dude's name is. I said, laugh out loud, Dave Shands. He's like, yo, yeah, I'm gonna be him. So people are hearing your story on Market Mondays every week, and they're like, that's gonna be me.
I like this, bro. Yeah, that chat, man. I hope they was listening to that chat GPT, just finding out what's going. The wealth of the world is on there.
Also, today, regardless of what's going on in the world, biggest piece of advice: your targets for your exit have to remain the same.
Yeah.
So regardless of what happens with Trump or whoever wins next that Peter Thiel picks, my targets and futures remain the same year round. It takes a lot of the frustration. That's why Rashad kept saying, listen, if you take profit, you don't lose that way. So if your first target is 100% and your second is 400, it doesn't matter who's in office. Those should always be your targets.
Let me ask this though. Let's say, for instance, you hit your target, but you see something that gives you confidence to stay in. Are you in a disciplined space where it's like, yo, I'm just going to take it and then maybe go back in? Or based on what's happening, do you let it ride?
You should always follow your plan and then start to size up.
Yeah. If I, and this is great because we talked about this last week as well. If I've hit my target and I've taken out my initial investment and it's a strong company, like I literally have done this probably 5 or 6 times. I like to call it, I start stacking my calls. Right. So like I've done it with Nvidia, and I shout out to everybody that gave me the congratulations. I've stacked Nvidia calls from $20, which are obviously stock split take into account, to $45 to $80 to $100. I have probably 8 calls on Nvidia, and as I see that price and the announcements and the catalyst events and the innovation that they announced, I keep stacking. I've done it with Micron. I've done it with Broadcom. Right. I've done it with Celestica. If I believe in the company and the fundamentals are there and the technicals are showing me that this is something that's going to continue, I do it. Right. So like I always invest the money. Like Chai said, I don't treat it like a checking account where it's like, yeah, we made 20,000, we made 30,000. No, I'm looking at like, okay,
where do I deploy?
How many more contracts? Can I go back into this position and grab some more contracts so we can let this run? Can we do 100% again? Then
you can talk real crazy on them hot seats. What made you pick this dumbass business? You can't even braid hair. Your beard off. How you a barber?
Yeah, I appreciate it, man.
How many companies are in the portfolio in terms of your options like portfolio? How many companies are in there?
Options. I have one. I'll just tell you. I got AMD. Yep. I have Netflix. It's nasty.
Netflix.
Don't be mad at that.
MU is going crazy.
See, you don't even know. I said Micron 5 times. That's Micron.
MU is MU. Ridiculous.
No, I don't think so.
Who gave you that one?
Huh?
So you got MU. You got
MU,
Netflix.
I got Meta.
AMD, Meta. That was recent.
Yeah, I got ASML. I just got ASML today.
Today.
Yep.
Today.
So you got 4.
Yep. ASML, Meta, MU, Netflix,
stay right there.
AMD. 5.
Stay right there. Just 4 is a sweet spot.
Okay.
Shands, my brother, man. Thank you for joining us.
Man.
Investing therapy, new segment.
I'm gonna tell my kids this is CSNBC.
That's funny.
Yeah, I appreciate it, fellas. I'm tapped in.
Thank you. Hold on, Chance. Before you go, speaking of 300% return, you're a content god. What would you do or have us do to grow our audience 300%?
To grow your audience 300%, bro. Keep getting people 300%, bro. Like keep these case studies going. So from that first call to like when I come on here and I tell you I have 3 million in the market.
Facts.
Got you.
Facts. And I also told you the dollar cost average into regular stocks too.
For sure.
Yes, sir.
You got to buy some long term, bro.
Yep.
Yeah.
Okay. I was about to say what, but I'm gonna get some data first, and then I'll ask you the question.
Microsoft, VOO, VTI. You're good.
Got it.
I'll call you after this. I'll call you after this, and I'll give you a target.
Thank you.
Hold for the long term, though.
Absolutely, gentlemen. Appreciate you. Keep doing the good work.
Brother. My God, there's a lot of plaques up there, my boy. I'm proud of you.
A lot of plaques.
Thank you.
Plaque boy, Shands.
Black boy Shands. That's yeah.
There you got. There you have it.
You gotta love when your friends execute and win, yo.
That's dope.
Mm-hmm.
That's dope.
Investing corner with Dave Shands.
Yeah. I love that.
He's in a year. He's been through a lot of emotions with
everyone you can go through.
Yeah, the AMD. Yeah, because
I'm brilliant. What the hell?
That was early January. Yeah.
Mm-hmm.
What am I doing? Man, I shouldn't listen to them. Should have did my own research. Oh wait, hold on. There's something here. Oh, there's a story here. Oh wait, I'm up 100%. What do I do? I'm up 200%. What do I do?
Yeah.
I'm up 370%. what now? And
Low
there's plenty of
key,
people who feel the same way.
That Houston tour date, that's a legendary date.
Facts.
The Trump coin happened that weekend. We called that when it was going to fall. A lot happened that weekend.
That's a fact. 100%. Get the book. You deserve to be rich. New York
Facts.
Times bestseller. But Dave Shands is also a testament to EY University and Red Panda. Red Panda almost, if he would have acted on buying Bitcoin, because you did tell him the price to buy Bitcoin. EY University, he actually did execute on the option. So, man, when you get that opportunity to join these institutions, it's not just, it's people that's really making money in real time. From a trading standpoint, from a long-term buy and hold standpoint, from a knowing when to get in standpoint, from a support standpoint, from being in the community standpoint, like, it's about to be dark days ahead of us. So, your community that you're surrounded by and the information that you're getting is sometimes going to make the difference between if you make it or not.
And if you want to make it, go to ianinvest.com. Our call will be Tuesday, tomorrow at 5 p.m. Central. If I made you money, please put yes in chat. We got to get Yomi, Ty, them little clips of them prices we called out for those dates. Can we put those out?
There's a couple of them. Shout out to everybody that was in that Caterpillar call last week and made some money. Shout out to y'all. And shout out to, what? I went back in the archives. Sometimes like I'll write my classes in my notes. And I was just looking at like the memory segment, right? I think September of last year, I did a class and I was talking about the AI space and I was talking about memory and how this is going to be a big thing. And we can't have compute without having memory as well. And this is why I was like so convicted on Micron. But I was like, if you don't like that, here are the top 3 inside of that space. And the top 3 were Micron, that one I liked. Western Digital, right? WDC, if you look up that ticker, it's rivaled, if not even outperformed Micron and Seagate. Seagate. If you look at those 3 companies, just in that September class of last year, those 3 companies have all gone over 150%. Just the stock, we're not talking options. The stock alone have gone over 150%. So that tells you about that story.
To listen.
Oh my gosh.
And those are legacy companies in that space. So it's not like they were new and they just IPO'd in the last year. Like, these are legacy companies who have found ways to reinvent themselves, reimagine the business, given what's happening in the world. Kudos to them and kudos to you.
Yeah, it was, when it hit me, I was actually, when I was writing the class, I looked at one of our memory cards and I was like, okay, that's familiar. Then I looked at the storage that we had. I'm like, wait, we're using a 2 terabyte Western. I'm like, oh, wait. We know this company. We see it all the time, especially in content. If you have to store files, you're probably using a hard drive. I'm like, damn, this makes a lot of sense. Oh, I get it. Now I'm connecting the dots, and obviously it's had an amazing year. Shout out to everybody that's invested in those companies. They've done really well.
Yeah,
for sure. EY University, man, made a lot of people money. Red Panda made a lot of people money. We're gonna try to work on something for Black Friday too, something that's never been done before. We're trying to put something together, trying to do something that's extremely limited, but access to information vitally important. So we're trying to. It's gonna be a difficult one to pull off, but if we are able to pull it off, we might be able to,
a little 1-2 move.
Stay tuned.
And for all my content creators, everything you need is right in front of your face. Apple, podcasts, YouTube, Netflix, the memory cards, the camera, that ecosystem just in content creation is amazing. But yeah, stay tuned for what may or may not happen for Black Friday.
Facts. Facts. For earnings, which companies are on the board as far as highly anticipated?
Trey, you want to go through the earnings and we go?
Yeah, I'll go through the ones that we've talked about, are in the portfolio, excited about. We got Uber tomorrow before opening.
Love long term.
My
underrated. Uber love.
If you listen to Jensen last week talk about his partnerships, Uber was one of the companies that he spoke about, and Stellantis, and talks in autonomous driving and vehicles. Love Uber. We did a whole segment on Uber here on Market Mondays. Excited about that tomorrow. Before Shopify is tomorrow morning as well. Spotify as well. Pfizer. We got AMD tomorrow after close. Y'all already know. I mean, we're pretty well established.
Spotify. Excuse me.
Yeah. Arista Networks will be reporting in the portfolio. Supermicro is reporting tomorrow as well. I would say Beyond Meat, but let's skip that.
I don't care what they do on earnings. That sector is over with.
Yeah. We got Robinhood on Wednesday, which is
love. Absolutely.
It was the one that got away this year. App Lovin', which is in one of the ETFs we've been talking about. And McDonald's is tomorrow. So when we're talking about, Qualcomm had that big announcement, and we covered it last week. They're reporting as well. ARM. So we got this is like that second tier of AI when we're talking about ARM and we're talking about Qualcomm. And then we got
Can we talk about who's going to be negatively affected in earnings by AI and Duolingo? I don't care how much compute and how much tokens y'all use. It's over with. Apple, if Apple and OpenAI is a competitor, wrap the business up, bro. I love y'all over there, but
gonna be tough.
Stock wise,
gonna be tough.
Long term, not good.
Thursday is another one that we talked about actually at our last event, mastermind event in January, which was Feature Energy. So we talked about Arista, they're reporting this week. Then we talked about Celestica, which had it at a blow away quarter. But we talked about Vistra as well. They report Thursday before opening. Another one of these energy plays that I think is going to be prominent. So definitely a big week. But I'm most excited, obviously, about Tuesday. I really want to see how AMD reports. So to see how we're going to be moving forward. Maybe we got to add some more stacks to it.
Yeah, Datadog is also Thursday.
Yep.
Iris, Open Door. Open Door, they're trying to build a little army like Sailor has built over there as well. I'm interested to see what they'll do. But yeah, Uber would do great long term for sure. McDonald's is still strong. Yeah, it's been a great year. It's been a great year of earnings and performance in the stock market. So much so NASDAQ on a 7-month win streak.
Yeah. You know what? There's a company here too that I feel like we might have talked about them on the second episode of Earn Your Leisure, which is Snapchat.
Yeah.
And I don't know. They're reporting on Wednesday after closing. I'm interested in how they report for a couple of reasons, but the number one reason is that I watched the CEO speak last week in Saudi Arabia. And he was pretty convicted on the story of how Snap has evolved, and its second largest market is Saudi Arabia, which was unbeknownst to me. So I had to do a little bit of research on that and how they're expanding, the segment that they're expanding in, the tools that they're using, the fact that they're about to hit. I think they're about to cross over 1 billion monthly users. When most times when we talk about social media, we're talking about Meta with WhatsApp and Instagram, and we're talking about TikTok. But Snap, 1 billion users is a lot of users for a company that's trading, I think, maybe at $8. There's something going on over there that I got to keep doing a little bit more research on. But something. You
mean a long term or in terms of a trade?
I feel like maybe at some point, with the platform that they've built, the amount of users that they have, the international expansion, somebody's coming for that.
To buy it?
I feel like it's a valuable asset.
Yeah.
Especially in the
move that they're making over there.
Yeah. Something, right? Like when you start seeing things like that, I'm like,
especially with everybody going over there to figure out a deal, Meta can't pick them up. Yeah.
So we'll just keep an eye on it.
Well, let's play Rashad, if you were the CEO of Snapchat, who would you be looking to offload the company to or sell to?
I just don't see the value in it. I mean, I feel like if Saudi Arabia is the second biggest market, I don't know how that's beneficial. Saudi Arabia has ranks 48th in the world's population.
What about in terms of power, though?
And capital.
Yeah, but I mean, as far as kids still use Snapchat. People make money on Snapchat. It's never really died. It stayed around. But as far as relevancy is concerned, I don't see what they do that Instagram doesn't do, or Twitter or TikTok. I don't see their competitive advantage. They're there, but I wouldn't see a need to acquire Snapchat if I was TikTok or Meta.
So here's, I think you kind of said maybe one of those points that makes it attractive is that you said kids use it, right? And so that means that your population stays young, and it maybe can continue to stay young because you always have a demographic. It's like when we thought about Facebook maybe 15 years ago, there was a population that was there. And now if you go to Facebook, it feels like that's where your grandparents live. At what point does Instagram become that, whereas TikTok has become for a younger audience?
It got a long way. Instagram still has a long way.
A long way to go?
Yeah, okay. A long way to go. Because it's being powered by people that still use it. So even if they get older, they're still users on it. Like I don't see. And I said this.
Yeah, but Facebook is too, no?
I said this 5 years ago too.
No, I'm saying Facebook still has 1.7 billion users.
It's not culturally relevant. It's not culturally relevant.
Yeah,
it have a lot of users.
It's not it's
not the driving force behind culture. Instagram is still the driving force behind culture.
Instagram is the jellyfish.
I don't see that going away anytime soon because millennials they're not gonna change. They're gonna still use what they are comfortable using. Younger people might not gravitate towards it at the same rate as but there's a lot of millennials. That's the problem. Like people discredit. It's like music. Like young people matter, but
the tastemaker.
So do millennials. So do Gen X. They matter. They still spend money. They're still active. They're still there.
I'm not arguing that fact. I'm just saying I'm looking at the components that like what TikTok has done in terms of they could make an argument that they're moving culture, right? Because that audience,
on a certain level.
You see what I'm saying?
Snapchat's not though.
I didn't say they are. I'm saying that their population is young, right? And so if young people are there, then eventually they will dictate, right, what culture is at some point. And that's why I say it might be a trend. Now, maybe nothing happens. That might be true too, right? But I'm talking about a stock that during the pandemic was at its heights and now is sitting, almost feels like it's dormant at under $8 right now?
Yeah, I think it's probably at $7.79. You better call Mark Benioff for somebody.
Yeah, it's just interesting to see that. When I saw him on CNBC and he's doing an interview, I was like, that's interesting.
Fundraising. You got to be visible.
Just be mindful.
Snapchat was $75 in 2021. Now it's $7.
Yeah, that's what I'm saying.
There's a reason for it.
Fall apart. Yep.
Yes.
Snapchat's not coming back from the dead. I mean, they're alive. They're not dead, but you don't after 10 years become the dominant force.
No, they don't. But that's what I'm saying. They don't have to be. Is what I'm saying. They don't have to be. But they can be attractive to somebody that says, how do we get in this space with a platform that already has?
If they're trying to build up another entertainment arm, I get what you're getting at.
You got a billion users, bro.
Yeah, just the rebrand play never really works. Like they tried to rebrand. They always try to rebrand, like, the rebrand play. Once you have your moment, you got to keep that moment.
You got to take advantage of it and move faster. And also, too, it's that genius over there in Palo Alto, Mark Zuckerberg. Just
we'll be mindful.
Yeah, but I think both statements are true. Should Evan try and offload the company to Saudi? For sure. Prime time. Will it ever be Instagram? Nope. But is there value there? Yes. Do I think the stock will be great long term? Nope. Told you in 2020, 2021. This ain't the one.
Yeah. Our second episode, we're talking about this. And we're like, nah, we can't see this long term. And it's still here. And so once we've seen companies, especially in terms of the semis go to Saudi to get investment. It was just interesting again to see him there and speaking so highly of the company and the expansion from the international standpoint of who's using it and what they're using it for. I was like, all right, I'm taking note. Put that in the top.
Market cap of Snapchat is 13.14 billion. Yikes. That's tough. Evan's a great CEO. I think just right time for the product. Like you said, Rashad didn't take full advantage. And you have a big ecosystem in San Fran with just a better CEO, better. Sheryl Sandberg was a hard out, yo. It's tough.
Yeah.
And then,
so how do you avoid situations like that? Because that's the benefit of investing in ETFs and index funds, right? But if you're investing in individual stocks, because that you can lose everything. If you had a large amount of money in Snapchat,
and there's a bunch of people who did.
It happens. It happened in Enron. Happens in a lot of different things. A lot of companies, most companies don't do well in the stock market long term.
Yeah.
How do you avoid that type of situation where you literally could have lost everything? You could have lost your whole life if you invested heavily in that one company and you lost 90% on it.
Listen to me when I tell you not to do it. One, number two, market share. If a company doesn't have majority market share, and I've talked about this before, and mind share, when you think of social media, most people think of Facebook or Instagram. You don't want to invest in the fifth best thing there. No. If I talk to you about watching shows online, most people are thinking YouTube. I think Vimeo's dope. Vimeo's never going to be YouTube. So invest in the market leader, the mind share leader, and also just buy out of the Big Ten. If you just bought out the Big Ten since the 1980s, overall you will be fine.
I think that's the key component here. Invest in the top companies.
Yeah, and not the third or fourth.
Top two. That's why I said understanding the indexes and understanding ETFs, you don't have to guess. You just look at where the top two allocations are.
Yep. You can make your own ETF and buy the top two in the space, but go with market leader. Like when I started streaming OpenAI after use the product into 2021, yes, there are other players in the space, but they are the preeminent, put this in chat, preeminent mind share leader in that space. You have to invest with them. Were there other companies that may be more efficient than ExxonMobil in the 1980s? Sure. Exxon was the preeminent leader. Standard Oil was the preeminent leader in the 1920s. Like, there's usually a company that runs the decade. Invest in that company. And it's not like how it was in the 50s where this information was hidden. They're front running the IPO and telling you they're probably going to debut at $2 trillion. They're telling you it's right there. But then people will still be like, well, what do you think about Papa John's pizza? I'm like, good business. It's not the sector to be invested in. Well, no. So
yeah, and it changes. I think that's the beautiful thing about when you look at the ETFs and indexes, the companies that are performing are going to be at the top. 3 years ago, right? I mean, when we started the show, we talk about ETF like XLK. The number 1 and 2 holdings were Apple and Microsoft, and they were both at 21% of the holdings. 21%. That's how dominant those two companies were.
A great company is going to, like, a short-term window for investing in a public equity is a 10-year hold. That's like a 1-year option. Like 10 years, they're going to be fine.
And if you look at the ETF and the holdings now, Nvidia is number 1 in XLK at 15%, and I think Microsoft is at like 14, and Apple's 13. So the allocation of Apple has gone down. The allocation of Nvidia has gone up. Well, that tells you how the market is moving. All right. So
and if y'all had to listen back in 2021, 2022, you would have heard me scream that shit about Nvidia too.
Yeah. And now Broadcom's number 4. It's like these companies that watch where the money's moving.
My new thing is, if you don't listen the first time, you deserve to be broke. This go for my friends and family too. Hey, yo, dog, I know you just did Market Mondays, but can you tell me that? No.
What's next?
No. Me not giving you nothing. Respectfully. No. This Christmas, if you ain't listening, I'm bundling up all my notes from Market Mondays, fat ass stack of papers, and a stocking. Listen the first time.
The Master Investor Almanac. Got something.
Simon & Schuster.
We got something.
Thank you for that assist.
Claude, I want you to transcribe every episode.
For real. Immediately.
Will Nvidia reach $344 next year?
Has a great probability too. I know some analysts are expecting 75% to 80% return. A couple things, performance of partnerships, Blackwell Ultra. There's a couple things that play it. That will be an exhaustive push. Is it unreasonable to get there? No, because if you look at this year, it went from the low of 86 to 212. And a year before that, adjusted for split, it went from 47 to 151. So it's inside the range of possibility. It is going to be an exhaustive performance to get there. Do I think it could get there next year? Probably, but if not, the following year, it'll definitely hover around there. I don't think Nvidia is going to slow down anytime soon, and I don't think they've hit their peak just because of how the company's performed, how well Jensen is performing at this time as a CEO. He's getting into like Steve Jobs-esque territory. I think so. I don't know for sure if in 1 year, but in 2 years for sure, it would definitely be at that price.
Yeah, I think Loop initiated that. Yeah, Loop Capital, they initiated the raise of the price target to 350, which is, I mean, it's based on a couple of things. The number one thing they said is that they're anticipating them to double the shipments of their GPUs next year, and pretty much throughout the next 15 months to 2.1 million. Which is a lot of GPUs when you think about the price target for how much these GPUs are. They also anticipate that the average price per sale is going to go up, right? Because they do obviously offer Blackwell and Blackwell Ultra, but they still have other GPUs that still sell. In fact, they announced today that they made a deal with the UAE to sell over 62,000 more GPUs. This is
how many are going to sell to OpenAI before they go public? Circular economy.
It's there. We talked about it with TSM coming on board, OpenAI and Oracle, what they're doing with Stargate, Amazon, their data center. What should we call them? Should we call them factories? They're almost like cities at this point.
Yeah. Smart city.
Yeah, in Indiana, that one's online. The power that's going to be needed, the compute that's going to be needed. This is going to be in demand, and demand doesn't look like it's slowing. Like I said, Meta got knocked because Mark Zuckerberg is saying we're going to win at all costs. And I don't care what happens, right? Amazon literally did the same thing the next day and said, look, I know we spent $100 billion. Next year, we're probably going to spend about 135.
And I think it was over exacerbated, that drop in Meta. If you're in Stock Club, I had that price set to go there 4 weeks before this news came out. But in terms of the way they're investing, I don't think people are looking at not only inflation, but the inflation on, like, he's locking in the price for better performance for 2 years from now. They actually had great revenue, and you punish them in the price of the stock. Like, what the hell are you doing?
This is that when we talk about sentiment, it was the investors that listened to the earnings call kind of felt like he was being overly aggressive, because his statement, and to me, I was like, that's the kind of CEO that I would like want. He was like, look,
he's reinvesting into the business.
We said we were going to spend $65 billion. We're actually going to up it to $75 billion. In fact, we can't buy enough. And if we do next year, we'll put it and add it to other aspects of the business. And to some investors, it almost came off like, well, he's spending frivolously, right? They're going to overspend, which could be a way to look at it. But
y'all
for me,
it's like that shit doing the metaverse. Y'all let him blow it back. And this is my point. Like, I was hypercritical during that metaverse investment era. He's actually investing into something where what the return on invested capital is going to be, and you punish him. And then it was 10 billion more. It wasn't like it was 55 billion more. It's a good spend, which that return on capital should be 2x in 3 years.
Well, we've seen this movie before with Meta.
For sure.
A few times, not just a few years ago, but it's happened like 3 times over the last 4 years with Meta, where their stock has dropped and it's always rebounded. So if history is any indicator of the future, nothing to panic about yet. But with that being said, let's talk about Shands had mentioned Netflix. So Netflix announced a 10-to-1 stock split. So let's talk about Netflix. But yeah, Netflix is also an example of the companies that usually when something goes up, it's gonna come back down eventually.
Yeah.
And Netflix had a crazy run up, got to 1341.
Yeah, 1341.
But
Yeah.
come back down to like 1,000.
Yeah, right above.
So
that 200 there.
Okay. 10-to-1 stock split. And what does this speak about, knowing when a company has actually reached its peak and now it's time to cool off a little bit?
Rashad, you're not saying that they hit their peak, did you?
No,
I
was about to. I'm glad you said that.
Their peak of all time. I'm saying their peak of, so it might be their peak of the year, probably, right? They probably not get back to 1,300 in the next 6 weeks. So I'm just saying, for a trader, it's like, all right, know when to get out, right?
I would continue to hold for long term. The thing that does concern me, though, as an investor, I don't like 10-to-1 splits normally, because normally if you take Berkshire, they hadn't split, right? I know Nvidia did a split. Put in chat, what was that? Usually when you have a 10-to-1 split, the price correction usually is deeper. I get the affordability argument that people have, because now you'll be able to get shares for $109. But as an investor, for the most part, you want exclusivity in who is investing in it. And when you start to see these 10-for-1s, 20-to-1s, the stock usually does not perform the same. I'm not saying that Netflix is going to fall apart, that it's going to erode, but they will hit a rougher patch for a little bit of time. I actually like the price where they're at now. Stock Club, I won't give away our price, but if we get in, if it falls to like 10.52.45, I like that as a position to be able to get in. But I do think, given how fast the stock has risen over the last few years, there may be a pullback into the high 900s at some point, which I would love to get in. But 10-to-1 splits usually are not an amazing sign for me.
You specifically don't like 10-to-1 or just splits in general?
I just don't like 10-to-1s.
So just
I'm not the biggest fan of 5-to-1, but 10-to-1s are not usually a good sign of private confidence in a public equity.
Yeah, because Nvidia feels like if that's the case, then that's an outlier, right? Because they did the 10-to-1, and
Nvidia is an exception to most mathematical rules and performance rules.
Yeah, I'm still long term on Netflix.
For sure, and I want to be very clear. Me too.
Yeah, so definitely still long term on Netflix. I think it's important for all the technical traders that have watched it. It's that 200-day. It's like sitting there, right? Like it touched a 200-day, it bounced off of it. Historically, over the past 3 years, once it hits its 200-day, it's bounced and it's been a positive return on that. So it's kind of floating around it. Will it get back up to its high? I don't know if it gets back up to its high. I think it ends out the year on a positive note, knowing that the first and fourth quarters are its strongest quarters. When you talk about the amount of watch time and you talk about the programming that happens in those, you're talking about a few fights that they've already announced. We already know what the NFL is going to be. They announced, probably their most watched show, Stranger Things, will be back. Now they had the ad platform to add inside of there. And they're in talks to potentially get Discovery Warner Brothers. So they put themselves inside of that bid. I'll be interested to see how the rest of this quarter plays out, but I'm definitely long term on Netflix.
Well, when you say in positive, you mean for the quarter or like which time?
For the quarter.
Okay.
For the quarter. Yeah. It's for this quarter for sure. Yeah.
Two things. I agree. I don't think they're going back to their high, but I do think that they do end up above 11.2675, 6.7.
Yeah, we executed on a few of those calls into September, and this is again for those of people who are in those options. We made ourselves available to invest in it, but we also said, hey, is there an ETF that has exposure to it first before we had the Netflix call, we said, let's find an ETF that has exposure to it at the highest allocation. That ETF was FDN. Shout out to everybody that actually invested in that, because that has been an amazing call. So much so that, I mean, I think it went up 500%.
Mm-hmm.
Now we're looking at how we can now invest in it again. So that's like I think it's it's a communications, like the communications of the internet. So Meta's inside that ETF. They actually passed Netflix inside of it. So another one of those, if you don't have it on your watch list, watch and add to the ETF portfolio that you have when you're trying to find that leg. This would be a good one just to have in the portfolio. But yeah, still long on Netflix. We actually got calls out until next September. So we took profit from the one that we sold this year, went into next year, just because we believe in the story.
Hold for the long term in 2022. It was at $162.71 at a low. Got to a high of $1,341.15. All your problems go away if you hold for the long term.
Yeah.
The more time you can have in the market, and I know y'all keep saying it's time in, not timing. It's both. It's time in the market plus timing is going to give you the highest gains. But the longer you hold, the more these problems go away.
Yeah, this was one of those companies that when we asked the question last year, what's the company that you didn't get into that's kind of run away? And it was Netflix, and we got into it around like 700. Obviously, it went up to 1,300, so it was a great gain. But I understand the trepidation around not liking splits, right? So if you watch how Chipotle reported last week,
different sector though.
Yeah,
Chipotle has the biggest competitor is the company that used to be invested into them, McDonald's. Netflix almost has no competition
from a profitability standpoint inside of streaming.
Yeah,
I'm with you.
I don't care how many Landman remakes y'all make. Stranger Things.
It's a tough business.
And I love 1883 and all the little slave period shows that Taylor doing, but boy, them fights and that Super Bowl,
they figured it out.
Christmas game. Netflix finds a way to keep getting better and having a great profit margin for their business on average.
Yeah, and then the cancellation of everybody can use your passcode.
Brilliant.
That changed the game. They changed the game so much that Disney said we got to do the same.
For sure. I have to relog in after that. It's Disney, Hulu, and
the ESPN did right. They did the same thing with ESPN and Hulu. Everybody's figuring out. Oh wait, hold on. There's more profit if we cut this password sharing.
For sure.
Thanks to Netflix.
Back to Nvidia. So, what do you say to people that have concerns that the market cap is too large? $5 trillion. Only 2 countries, I believe, have GDPs higher. They're more valuable than anything in the world, almost, for the most part. And a lot of people are saying that it's reached a point where it's so massive that the upside potential is on par with slower growth rate potentially.
If you're comparing it from 24's growth rate, and it's going to slow down because it's hard to get those exponential returns year over. Like, I don't want anyone to think you can be able to get 100 to 300% long term in a stock consistently. I could argue for the value that is created in the entire ecosystem, they're undervalued because they brought up the valuation of AMD. The entire, like, once we talk about the entire ecosystem, it starts with them. So is the outsized gain over with of getting an easy 90 to the 150%? Probably. It doesn't mean that it's overvalued though. And once again, Nvidia is the cornerstone of the new companies that have to save the GDP of America. And even when DeepSeek and China made the decision to make their own chips, that was because they didn't want to be dependent upon Nvidia. So they're the once-in-a-lifetime company that made other companies reimagine how they do things. And Jensen's, if we go from our lifetimes, he's easily working his way into top 3 CEOs of our era.
We just had this conversation over breakfast the other day.
Like, Steve for me is 2, Gates 1, Jensen's, and he's pushing to be 2. Depending on how these next 2 or 3 years go.
And my brother, we literally had this conversation over breakfast, and that was what we talked about. I'm like, at this point, has he passed Jobs?
Well, here's the thing. This is why I said Steve Jobs is the greatest.
So this is his stance.
Steve Jobs is the greatest CEO of all time, even better than Bill Gates, because he's the only. It's like Kanye. Kanye is the greatest to me because he's the only one that reached the top level in multiple different. Like he was a top producer.
Mm-hmm.
He was a top rapper,
regardless of what your top rapper, designer.
He was the top in fashion, right? Like everybody else just kind of like Steve Jobs changed the world at least 5 times.
For sure.
If you really think about it. Right? From iTunes. We talked about how streaming has literally changed the face of music. We talking about the iPhone.
I think that we start there.
FaceTime and the iPhone literally
that's
changed the world.
That changes everything.
We talking about Pixar.
Yeah,
changed movies, changed Hollywood.
When he was blackballed out the entire tech industry. Yep.
And how many people have enough chutzpah to lose your job, fall down?
When you say change movies, what do you mean?
What?
Animation.
I would argue.
I'm playing. Here's God's advocate.
I know. We're not attacking what I'm saying. Yeah.
That did animation. Disney was already doing animation. Obviously, not to the level of level. They are the
tech aspect.
Hear me out. They're the first to make animation a household thing and a motion picture thing. Now, how did they elevate that? Yes,
elevate a
stratosphere. Toy Story Dynasty.
Yeah, no, it's different.
I would argue.
All right, check this out. So then argue this.
It's just different.
Toy Story, right?
It's just different. It's like he didn't make
Toy Story's not bigger than Lion King.
It's just like so let me finish.
Right?
It's just like he didn't make the person. He didn't make a laptop computer, but the MacBook revolutionized.
It elevated.
Absolutely,
100%.
Absolutely.
Now we have 4 things. We got music.
Yeah.
We got the MacBook. We got the iPhone. We got Pixar.
You can't leave an iPod.
Yeah.
Okay.
Yeah.
Okay.
So he changed the world 5 times.
Minimum. Okay. He changed marketing.
Now, at least.
Here's my
and that's not even off of inspiration of what somebody got inspired from him and did. And you know what I mean? Like his tree.
And here's what I'm saying, right? And this is why
this is a great conversation.
What I'm watching Jensen do right now and what Nvidia is doing. Let's talk about change the world. Like the argument is being made right now that without this company,
that's my argument.
Entire world economy
would be fucked.
Now, that's not just right. Like the world's economy. This is not a sector situation. This is not a technological situation. This is a national security situation,
which he took from Intel. I know y'all hate my Intel take, but I'm right.
Yeah.
When Intel was supposed to be that,
they couldn't do it.
They couldn't do it. Couldn't pull it off.
So yes, the iPhone is revolution and Jobs is revolution, but what he's on the cusp of right now, where we're at right now, and how dependent the world is on his technology.
Just like you said,
we've never. So
you said the same thing with Pixar though, because he's not the first person to make computer chips.
But here's what
like they are. Intel was doing it before him. AMD does it.
Like it's an elevated level.
China's working on their own Nvidia under water
as a response
that nobody knows about
as a response.
But he's not the only he's not a priority.
Intel was making CPUs, and that's why they ran off on it. Right? They're making GPUs to number one. Like that's where it starts in 2013, 2014. Right? Obviously, Nvidia's been around a lot longer, but 2014 it's GPU, and then it's like,
that's when they get the switch. But they were CPU first. They were the game.
I'm just trying to give context to it, right? And then it's like, oh wait, this is what's going to power artificial intelligence, which is right. Not taking anything away from the iPhone, probably one of the most important pieces of technology that's ever been created. But artificial intelligence, and Bill Gates has attested this, is the most important technology that he's ever seen in his lifetime. And the company that's powering that artificial intelligence, for the most part, is the company that Jensen's the CEO
Well,
of.
that's debatable.
Here's what I'll say though.
That's not me. That's Bill Gates.
But there's no one doesn't work without the other. There's no
ecosystem without the iPhone
and the internet.
Well, but this is what I'm saying.
The internet.
So,
right?
Who's the inaugural part of that? Is Bill Gates inaugural part of all those things?
Fucking Al Gore.
Yeah, but I'm saying Bill Gates. Bill Gates. We can say Al Gore. We can say the United States government, but we can say Bill Gates for sure.
Coconut water. Stay hydrated.
Stay hydrated. Right? Can we say that Bill Gates is a trusted opinion in that space?
Yes, but what I will say, it's hard to compare just because of the run. Remember, I'm like the Apple II that my grandmother had when I turned it on in 2003 that she bought in 1989 still works. Okay. Testament of quality product. So remember, the Nvidia call is my call. I agree. Jensen's greatness. I think it's like the show The Men Who Built America, right? Their eras. So Gates was the early foundation.
Like Carnegie still. They would still built America, still built the fucking whole infrastructure.
Yeah, but what I will say though,
it's too early to put him over Steve Jobs yet. It's too early to put him over.
He needs another 4. But if there's a closest one,
he needs another what? How many years he need? We're headed towards 6 trillion here.
Quattro. We need another 4. Because here's the battle. This is the battle between. No, none of the 4 years. Oh, the battle is going to be, and it's a good lesson. Even when you're IPOing, there are themes that the banks push to the public to get you to buy, right? 27 is going to be Who Saved America. That's going to be his LeBron Game 7.
Who's saving it now?
I know. Trust me.
Right? That's what I'm saying. Who's saving it now? Who's been saving it for the past 5 years?
The battle is going to be: is it him or Sam that saves the American economy?
Sam can't make his product without it.
I agree 1,000%. Once again, for the smart call, I know. I'm telling you the theme that they're building.
Yeah,
that they will be building into 26. That's why they're trying to get OpenAI to go public before, so he can get caught up in that downturn like the companies did in 22.
Right.
So it's interesting. But if there is a closest, I think I was the first one to say the closest to Steve. But I think he needs 4 more years. Steve weathered many storms. He left, was right, got pushed out, came back, brought up the value. iPod changed the Macs, MacBook brought up the valuation of the company when they thought the company was dead, took over the music industry. I agree. I just think we got to get through the storm. If Jensen can bring us out of the 2027 storm, number 2 all time.
He brought us out the pandemic, but he did bring us out the pandemic.
My call for the record. Clip that.
This is a storm, but we can't discount that storm.
I agree.
Right? And having the foresight to see where this thing is headed.
Foresight.
You don't look, and I think you just said it too, right? And by the way, this is like what we're talking about Friday morning over pancakes. For
the record, I was just gonna say that this is what your friendship conversation because the LeBron versus Jordan thing don't matter. That benefits Nike.
They probably sit in there like, yo, what are these two talking about? This is what we're talking about at breakfast.
Passionately too. Yep.
Yeah, you know how passionate it gets. And I'm just like, nah, bro, because you're right. He's raised the valuation of AMD, Broadcom. Think about how many Amazon, right?
And the App Store. We forgot the App Store.
Rashad.
You my dog.
There would be no Meta, no Facebook, no Twitter without Apple.
We have to. We also got to give Tim Cook credit.
No Uber.
No, we have to give Tim Cook credit then if we're going to start going there with the services, because if you look, that graphic and we should probably put this in there. But the graphic between the valuation of the time frame that Steve Jobs had it and the valuation since Tim Cook has been CEO, bro, he took this thing to it's at 4 trillion, bro. That's a 3 trillion.
I agree 1,000%, but that's a banking move to give the dividend. He also did that to get from underneath Steve's shadow.
It's also a numbers game. You can go from it's harder. All right,
to go from 1,000 to 1 million.
Exactly. It's harder to go from 1,000 to 1 million than it is to go from 1 million to 100 million.
Mm-hmm.
But you're looking at somebody that took from $1 million to $100 million, you'd be like, damn, that's really. But really, it's harder to go from 1,000 to $1 million.
So how hard is it to go from 1,000 to 5 trillion?
He didn't go from 1,000 to
5 trillion.
He inherited. He inherited.
Who?
Tim Cook.
Tim Cook inherited.
I'm not talking about Tim Cook anymore.
Jensen.
I'm talking about the guy at Nvidia.
Oh, no, that's my guy. That's my pick.
Well, I'm asking him.
Yeah.
No, nobody's denying his greatness.
Yeah.
So you got to add that into the equation now. Like,
if you're the second, if you're the third best, I mean, no, LeBron. If LeBron's the second best player of all time,
that's not a slight.
It's not a.
Because we're gonna be clear. Gates is one.
What it is a good conversation.
But is Gates one? Because Gates took everything. Steve Jobs. That's Steve Jobs.
No, he dog.
Allegedly,
y'all go back.
Allegedly,
Bill Gates wiped Steve down.
But Steve Jobs he took a lot. I mean, according to Steve Jobs, Bill Gates took everything.
Did he? He took the license model that Steve Jobs didn't create. That's the thing. That's the money, man. Now, if we're gonna be real, Rockefeller won all time.
Okay, right. Let's say
I'm just talking technology era, but all time, technology era.
Yeah.
Gates is one. Now is he conniving? Can be evil? Mr. Burns for sure. But if we just talking head-on-head competition, and even with that, if I invest into you and save you, and you become number 2, that's fruit off my tree from my capital when nobody else will give you capital.
Mm-hmm. You got one there.
Bill Gates single-handedly saved Apple while Steve hated Bill.
By creating Windows?
By investing into the capital when he came back.
But even making it I think he has like a claim to making it personal compute.
Bill Gates literally invested the money into Apple.
Yes.
To save them when no other bank would give, and they wanted Steve to die again because they thought he was too arrogant.
So you're saying that's fruits from his labor, which would, if we go back to the Kanye analogy, then that would be Jay, which would make you say that Jay is better all the time, where he's saying like, no, nobody has done what Kanye's done.
And even with the capital as great, and I love Steve Jobs dearly, he did not have market share. They put charges on Gates for having a monopoly. Think about that. Like, they had to break the company up. There was no, like, I know a lot of people now in media had them stories about Jordan, but they wouldn't say it when it was on the court. It's the same thing. Nobody was talking like that about Bill.
He gave you $20 million on stage without even blinking. You gave him 20 minutes on stage. What was you thinking?
Even to not have ego when Steve hated him, to tell Steve, you're too important to go away. I'm going to invest and make sure you don't go away. Tells you how much dominance he had. Now, you can also argue he invested the money so that the monopoly charges wouldn't come back again. Gates won. Gates won. Jobs 2. Jensen 3. But when it's 29 come, Jensen may be number 2. But Steve Jobs single-handedly ruined the music business. Changed personal computing. Changed iPod. FaceTime. Most of y'all in y'all relationships, because the app that y'all connect with people on is all on the platform that he built. There would be no Uber, no WhatsApp, no Meta.
There would be no Instagram.
No Instagram, no Patreon, no Gmail.
Let's set the record straight. Instagram was a photography app. That's why it's called Instagram. Instagram, when it first started, was only for Apple users. It was exclusively in the Apple store. If you had an Android, you couldn't get Instagram when it first started. That's a fact. How many billion-dollar companies was launched off of the platform of the App Store?
You can damn to say all in the max.
There's a number of them, but listening to that statement, how many were built off the internet?
No, that's why I said the internet. That's why I said there's no AI without the internet, and the internet is something that is
until it's not, right? Because the artificial intelligence is not even the way that they're looking at it. It's not going to be on this device, and it won't be on this device. It'll be
that's the next iteration. But
who's going to power and who's powering that? I guess that's to the point of like where we're headed.
Until then.
Yeah, that's true.
All right.
But this is the way y'all conversation. Who gives a fuck about Jordan and LeBron and except Nike board members? Can we have a conversation one day about like who created that? That's a brilliant because Kareem never get brought up. Only Nike athletes get brought up in that greatest conversation.
Greatest of what?
Greatest piece of branding ever.
Well, Steph Curry now. He's getting brought up.
Finally. Oh, you're saying like non-Nike athletes, you're saying?
Yeah, Kareem. They'll never even mention Kareem name.
He's in there. He's always in somebody's
It's
spot.
Disrespectful how they mention Kareem.
He should, yeah. I mean, based on career and what everything he's done.
Kareem won since he was 15.
Yeah, he's always won. Yeah.
Yeah.
Okay. What's one lesson from an investing legend that has forever changed your life?
Hyper concentration is the way to go, and diversification is a myth and a lie that they tell people because they don't want to get a real secret to. Paul Tudor Jones and Warren Buffett. Hyper concentration has always been a way to go. So even when Michael Saylor does it now with Bitcoin, is that like you don't need 52 different investments because you can't manage all of those, and it's not the best use of capital. So regardless if it's my 2 tech 2 index formulation, love for Nvidia, even like high use futures at a time in 2015, 2016, when most people were not even looking at futures as a way that was normally as a hedge. It wasn't used as an accelerator. I think the way you guys have massively done media, I don't think most people treat media like an asset. Mistake. Mistake, right? And then even taking that media asset and growing it into an in-person media asset. But yeah, hyper concentration is the way to go. That's why even when Dave, I was like, you don't need 4. You got it. And he has a great 4 coming out of the gate. Diversification is a tool for those who don't know what they're doing.
My investing advice from a legend: 2 tech 2 index, no stress.
I appreciate you. You're so amazing, yo. It don't take much to get me.
You know why? You know why it's so good? It's because it sounds so. It's like, damn, that's right. Like it feels like it's too easy to think of, but I'm like, yeah, that's pretty. Yeah. Yep. Every time you think about it, it's like, yeah, that makes sense. Yeah.
And the automation.
Great advice, my friend.
Thank you, my brother.
And then also Warren Buffett, another quote from him is to be greedy when everybody's fearful and be fearful when everybody's greedy.
Facts.
Got to do it. Got to do it.
All them times y'all was out balling and stayed in working. Like,
because that goes to the philosophy of buy low, sell high. Most people traditionally have done the exact opposite, and they have brought high and they sold the low. Understanding that one thing.
Yep,
can change your whole perspective as far as that is concerned. If you don't buy high and sell low, you'll make money. If you buy low and sell high, but it sounds a lot easier than it actually is.
All the best advice is until you go through it
because of emotions.
Thank you.
Yeah, but he got. I think that when they ask us that, I'll just throw that other one in that I always say is that if you don't make money while you sleep, you'll work till you die.
That's a life-changing one.
And it's just, when you invest in the market and you realize that your money has to make money every single day, and that's why the investing thing is so important. It's like so important.
That's the ultimate.
We've been saying invest or die, but it's like, nah, bro, like this is it.
Yeah,
this is it. Like this is the way to earn your leisure. This is the way to have freedom. This is the route.
It's the ultimate business model.
It's been the route, and it's just I don't know if it's unfortunate. I think it's fortunate that we have platforms and we have resources now to educate on it because this is the pathway.
What's one hot commodity in a decline?
Man, a few of them, but if you look, rough rice futures are down dramatically. They were at $24 a few years ago. They're down, so that goes into like food supply. Rashad, from Blackout, we may have to talk about your little Instagram post about the warning label.
The cancer?
Scary.
Yeah. Topic first.
Mm-hmm.
Yeah, there's that other topic that's happening.
Which one?
Well, oil. That in a country in Africa.
Oh, okay. I thought you was talking about the oil being massaged into his hair.
Nah.
Okay, got you.
No, not that. You gotta read the warning labels.
Hello. So much I want to say, but yeah.
Read the warning labels.
Mm-hmm. Remember when everybody thought lumber was going to go up forever?
Then the cost of houses, it did rise for a little bit.
Yeah.
But the thing about Trump too is that he's kind of like Kanye. Because remember I said that Elon Musk is like Kanye.
You did.
Trump is actually he has a lot of similarities to Kanye also, because remember they were saying like when Kanye doesn't really read a lot. He receives his information from people around him. That's why he can't really explain things.
Mm-hmm.
And Trump is the same way. Like even if you're watching him yesterday, like he doubled down. You would think by now, the first time he got asked the question, he had time to research who the Binance founder was.
Oh, yeah.
He just doubled down. He said, I don't know who he is.
He said, I'm gonna tell you something. I don't know.
But so this goes back to Venezuela, Nigeria, a variety of different things. You could tell that people are telling him things.
Yeah.
Talking. They're telling him high level talking points
that morning briefing.
That he can remember, that is easy to repeat.
Mm-hmm.
But if you ask him like detailed questions, he has no idea how to actually respond on it. So he's good at spinning it as far as like brushing it off, deflecting, insulting people.
Mm-hmm.
But he's getting fed a lot of information in very short sound bites.
Here's the time
that he has actually no idea what he's talking about.
How much do you believe it? Like, do you feel
I believe him a lot.
Because when I heard the response, like I didn't think he was going to double down. He actually tripled down and said, I'm gonna break some news here. I don't know who he is. But then the very next line, I believe, was when they asked about Bitcoin, and he said he's not familiar with it. And then they brought up the fact of his family's firm has made billions in Bitcoin. It was kind of like,
I believe him a lot. He's 80 years old.
I don't know how much of that is. I feel like was true.
I think it's a high level as far as like, I think he understands what nodes are and the inner workings of the blockchain? No, I don't think so.
I don't think that.
I don't think so at all. I think he knows enough to have people in position. Because the guy's busy, right? He's running a country. He's doing real estate. He's running. So it is understandable not to be extremely knowledgeable in a variety of different things. And I don't think he's knowledgeable on a lot of stuff, because you could just tell. You could just tell that he's not knowledgeable. But he, like I said, he does a good job at spinning things off. And even when he was like, they came at me, they said that I was, and the reporter actually did a terrible job at countering that, because even if you have a low level of education, he was convicted of 36 felonies. You did get found guilty. You literally on federal wiretap trying to rig an election. But the way that he was just able to spin it, like they tried to frame me, and I was completely innocent, and I got off. I'm like, how did you get off when you got convicted of 36 felonies?
30. I think it's 34. But I don't know how it was edited, but I agree with you there. I'm like, wait, no, there's a difference here. You were convicted. I think that, and it might be a strategic way
for his own protection.
Exactly. Mm-hmm. When I heard him say that, I'm like, oh,
that was the first thing I thought.
If I deny that I know anything about this, like, look, I'm on record. I don't know. We're making $8 billion, but I'm not really sure what's happening over there. I mean, right? It's like almost like, oh, that was he just protected himself by saying that.
I don't even think he's worrying about protecting himself. He's the same guy that said I can go to Times Square and shoot somebody in the face and get away. That was last administration.
That was last time.
I mean, everything that he's done so far, I'm pretty sure he has very little care about protecting himself, because
he's built the protection around him.
There's no consequences. There's not. Who's gonna tell him you're in trouble?
Nobody, because he put them in.
It's impossible
for now. No, I'm saying for now, right? But his kids will outlive him, right? And so, like, could there be charges that are brought allegedly? I'm not saying that they're doing anything fraudulent, but could there be charges in 6 years or 8 years, right? If they find something, I think that was like one of those protective measures. That's just how I perceived it.
And all I know is whatever you did with CZ, you better not do with SBF. It's not gonna go the same way. He's up on that council
next?
part.
He got 30 years.
It would look crazy. But what do I know? Gotta love investing though. Greatest game on earth.
I think it's interesting, right? Like the guy who creates a crypto czar says he knows nothing about Bitcoin.
But that's David Shands. Like that's what I'm saying. I don't.
But the position was created.
Him saying that he knows nothing about Bitcoin might not be a lie. It might not be a lie. But because relatively speaking, you can. I mean, nothing is a vague term, right?
Yeah.
I think he knows enough to know what Bitcoin is. But if he had there was a Bitcoin quiz, I think he would fail. But I think most people invested in Bitcoin would fail a Bitcoin quiz. Most people don't really know what Bitcoin is. That's the scary part about it.
The answer to the quiz.
We don't even know the founder. Like
Hal Finney.
There's so much stuff about this
in the CIA, but y'all
like if you had like a pop quiz on it, most people that's investing in Bitcoin would fail a Bitcoin quiz.
I'm not even disagreeing with that. I'm just saying there's something about being, I don't even want to call it dumb, so smart that you're dumb, right? You're investing in the asset. Like you're currently
I'm gonna say the real answer to the quiz is to deploy capital.
Right. Like you
can know all that shit and
you're benefiting from it.
And it's like knowing the most and deploying the least does not make you a winner. Can you take off for 5 years?
If somebody says right now, look, we got, silver mine in Mexico and it's guaranteed to go up 87% every single year. I do a presentation. You got $1 billion. This I know for a fact because I used to be a financial advisor. Mm-hmm. So I understand that most wealthy people are not fully educated on money.
At all.
That's why they trust their advisors. That's why they have a financial advisor. Mm-hmm. That's why somebody like Bernie Madoff could run the biggest Ponzi scheme in the history of the world.
Mankind.
These are not just stupid people. These are educated people. These are owners of sports teams. These are billionaires. They didn't ask enough questions because they're trusting this person. Like, It's like, look, I got to run a sports team. I got to do this. I got to have a legal firm. You can't be an expert in everything simultaneously.
It's tough. Yeah.
That's why you have trusted advisors around you and you're trusting their advice. The problem is that the people that he has around him are giving him advice based off of their own personal interest.
That's part of it. I agree with you. That's part of it. But there's also the part where you're actually creating positions, changing policy, changing legislation to make sure that this asset thrives.
It's the money. If they come and say, look, everybody here, we all gonna make $1 billion.
Your son,
we all gonna make $1 billion, including yourself. You give us the money. This is how it's gonna work. All we need you to
and
do
they deliver it.
All we need you to do is push it through.
Push it.
I'm not gonna ask 1,000,001 questions.
Yes, you would personally.
I'm just saying, as the average person, right? The average person is just like, all right, these are my friends. They're all rich. We have a trust. We've made money together before. I understand enough to understand the play. Mm-hmm. All right, I'm pushing it through.
Yeah, I'm saying, but there's an understanding there.
But I mean, George Bush went to war and didn't even understand what he was doing.
Yeah, it was extremely.
They made him go to war off of misinformation. He didn't literally the longest war in United States history. Yeah. And they had
farce.
They had a 5-star general get in front of the United Nations and completely lie. So I think how far deep the rabbit hole do you want to go?
I said, no, I agree. I'm saying that is true, which is why I think it's like, I'm going to say I know nothing to protect myself, even though I have an understanding. If this goes right or wrong,
I think that's true.
If it goes right or wrong, I don't know nothing.
Yeah, I'm not saying with Bitcoin, but with CZ, I think he's, and who knows, Jake, 1090 Jake, go pull up CZ paperwork and see what it's.
Yeah, because that would, even with Binance, I mean, maybe that's another
stop,
but like that. All right. Because I had Binance before there was a US Binance, and I'm like, yo, what? Huh? That another time. Yeah, another time.
Another time. Back channels.
Another time.
All right, ladies and gentlemen, it's been real. Tune in to Blackout at 10 o'clock Eastern Standard Time on Wednesday. And make sure you listen to Earn Your Leisure 6 o'clock on Thursday. We got the good brother Dre London on. Going to talk about the music business, how he really started Post Malone's career and flourished that. He's in the liquor business now.
Yes.
So there's a lot going on with that.
Took shots with his. He got a nice spirit.
Tap in.
Yeah, that's a fact. And congrats to Nori and all the run champs. They ran at the New York City Marathon.
Oh, that's fire.
I was following a little bit of it, man. That was dope, man.
Yeah.
That is no small feat. So shout out to everybody that participated yesterday and did it. And I think it's Scorpio season, right? So happy birthday to all the Scorpios out there. Love is love. Be good to each other.
Also, but
you want another you want another text. You need a few texts?
Sure. This engagement is provocative. It gets people
Say
going.
please. Say please.
Happy belated to my brother Bob Chin. I ain't talked to you in a minute, but happy belated birthday. Congrats to Q Harris out of Philly. He was in that race too. Yeah. So blessings to you. Shout out to all of y'all running the marathon. Marathon continues. Long live Nip, Sam, whole squad.
Absolutely.
Yeah.
All right, man. Y'all be good to each other. Shout out to the good folks at Massive Pill. I just downloaded that Big L album.
I gotta listen to it.
I'm not all the way through it, but shout out to them for keeping hip hop going.
Yeah, for sure. They've done a great job this year, y'all.
It's another one.
It's
another one.
Yeah, I'm just pro everything Massive Pill. Not just because y'all affiliation, but everything they dropped this year.
Yeah.
I know they talk a lot about the Clips run, but the Massive Pill run these last 2 years, they have not dropped a dud.
The Mob song is on. That's on radio.
Oh man.
Yeah.
Stock Club call tomorrow 5 p.m. Central. Let's get to it. Thank y'all, brothers. More to come.
All right, y'all. Be good. Love is love. We'll catch y'all Wednesday.